All right, and we are live. It is Friday, January 15th. Finishing the day up $100. All week and all month really has been a pretty kind of small wins, small losses for the most part. And I think that's in part because I've kind of decided that I want to take smaller risk because I had a big drawdown in November, and so I think it was important for me to kind of limit my share size and do what I need to do. But I think I'm kind of coming out of that now as I kind of establish that I'm able to kind of limit my losses and take a more refined approach to to my strategy. I've been kind of obeying my own rules a little bit more and sticking to my own plan and trading a little bit better in that sense. So let's just get into the trades from today. I actually was down at most right off the morning after I traded plug in a very small hit on NKLA. I tried along but threw it away pretty much instantly. But plug mainly was the one in the morning that I just struggled with, and this is where the difference between a home run and a base hit is right here. So I'll show you. Let's see. I had a few different tries at this. Here's my Nikola long for 300 shares, and then just out for like a little over a 10-cent hit. So not really a big deal there. Okay, so shorting 300 shares. There was actually a mistake. I shorted 300 shares at 637. So let's go to a 1-minute chart here and take a look at this. Plug was one that going into today, I was pretty confident that I wanted to short. Look at all these bottoms kind of at this fib line that I've drawn. You can draw. I don't usually use Fibonacci retracements, but I find that it's sometimes helpful on big moves like this. But take a look at this. Bottom here, bottom here, bottom here, bottom here, kind of at this 64.50, right? We're gapping down through that this morning and then retesting it to the upside and then coming back down. This is really a sign to go short for sure. But I watched this right off the open. It was kind of squeezing up here, and it was testing that level once again, and this would have been just a impeccable short entry, obviously, to go short here, and then you can set your stop at high of day after this candle closes, because above high of day is above that $65 level that it keeps failing at. So this would have been just such a juicy entry. But I didn't take it because, when the market opens, I tend to be watching a lot of stuff. I'm not really sure I was looking at this one right here. Or even if I was, I thought, oh, it's squeezing up. But sometimes you got to look at what does this mean for the stock? And does this, oftentimes the perfect entry, this is kind of important. The perfect entry is going to be in the spot where you least expect it to then move in the opposite direction. So in other words, the perfect entry is the hardest one to find because it looks like the pattern is failing, right? Stock's coming down, 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 down. It's going so far down, and the move that's about to come that you don't realize is that bounce back to the upside like $3 or $4 a share. But the reason you don't take it is because you don't buy that dip because it's going down, 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 down. That's not a perfect example, but this sure is. It's coming up here. Look at how perfectly it touches that that $65 level, and then fails and comes back down hard. This is really a beautiful thing, and I wish I had taken it, but I didn't. So let's see. I went short at what, 637? 637 is right here. I guess I went short. I don't think I was looking at a 1-minute chart. I think I was looking at a 3-minute chart, but it doesn't really matter. I went short right here. It squeezes up. Let's see where what happened here, because I know what happened. It was a mistake. I went short 300 and then I added another 300 short. Check this out. I went short here and then added 300 added another 300 share short at 63. So I actually averaged down on my position, or averaged up. I don't know. I was short, so I guess it's the other way around. So as this came up to 63, I shorted like right here, and accidentally. I meant to cover my 300 shares, but I accidentally shorted. But as it started coming back down here, I was like, oh my God, like this is working, because I averaged down on my position. My average was no longer 62.30. It was more like 62.70. And then I was able to cover it like 62.66 for like a small, I think it was like a small hit. I don't know exactly what the average is. Let's see, it would have been 65 or so. So I pretty much got out break even. So, you know, my mistake kind of helped me there, because it did come back down. But if this had squeezed back up to the highs, I would have been in big trouble. I did not mean to short 600 shares. So then I tried it again, shorted 300 here at 62.40. That was at 644. So let's take a look at that candle right here at 644 as it was coming down. Shorted at 640, so pretty much here at like the high of this candle, and then it finished lower. I was up on this trade at most probably, I don't know, let's see, what was I short again? 62.40, comes down to 61.75, so that's 65 cents on 300 shares. That's over, it's probably about 200 bucks. I was up on that trade, boom, squeezes up, and I was thinking about where my stop would be, and when I took this trade, I thought my stop should be, well, I think I was looking again at a 3-minute chart. So this is where I should probably look at the 3-minute chart to see kind of what I was looking at. And unfortunately, this is right here, by the way. I went short on this candle as it was coming back down. And then we get this big green engulfing candle, which looks kind of scary and bullish and looks bad for shorts. And I thought, okay, my stop should be over $63. Well, should it be? No, probably not. And this is the difference between a base hit and a home run right here. It can be exactly just where you set your stop. That's like been the theme of this month for me. Like setting my stop in the wrong place to just eliminate a little bit of risk. So in this case, I set my stop at 63 instead of where should it have been? It probably should have been above the high of this candle. I mean, it's tough to say, but I think you have to defer to, you know, the high of, you know, the recent high candle versus the like price level you think is important. So like 63 I thought was important because it's like right above VWAP, but what do stocks do all the time? They fake out. They do false breakouts above VWAP. If my stop had been above the high of this candle, look at this. What's the high of this candle? This is where I got stopped out, and I got stopped out at 63.10, and that's where I took the loss of 170 bucks on the trade. And this is it. This is the difference. It comes kind of to that 20 exponential moving average here, and fails at VWAP, and it comes straight back down. But what's the high of this candle? It's 63.23. What's the high of this candle? 63.27. That's a 4-cent difference. 4 cents. So if I put my stop above 63.30, I stay in this trade, and it comes from there all the way down. You set your stop here, and you do not get out of the trade. You're still in for 300 shares. It comes back down. You're adding through the break of 61.50, and you're golden. And this is a home run trade, a home run. 300 shares in. Even if you just don't even add 300 shares in at 62.40 average, down to 57, you're taking profit along the way. You're probably taking a lot of profit in here, but as the market comes down and propels this thing lower, down to $57, that's $5 a share on 300 shares. It's 1,500 bucks, assuming you don't add to your position on this breakthrough 61, which sometimes I get scared and I don't add, but I probably would have here because plug looks so good for a short. Okay, so that's it. I mean, that's the difference between a home run and a base hit. Exactly. Where you set your stop, right? Because it is so important. And I think in this case, it was such a big mistake. And the reason for that is I got stopped out at 63.10. Okay, I had my stop at 63, got slippage stopped at 63.10. If I put my stop above 63.30, that's 20 cents above 63.10, right? 20 cents. Well, what's 20 cents on 300 shares? What is that? 60 bucks? Calculator, 300 times 0.2 equals 60 bucks, okay? 60 bucks more of risk. That's all you need. 60 bucks more of risk. Is that going to kill me? No. Is it going to put me down 250 bucks instead of 200 bucks on the day? Yeah. But it's $60 more of risk in exchange for the opportunity to get $5 a share to the downside. Like, it's a no-brainer. And I didn't do it. I opted to like take a little bit less of a hit on it coming up through here. And I thought the setup of big green candle, kind of doji, and then continuation is a setup. That is a setup. At least on mostly it's mostly on 5-minute charts. You see that, but the pump, the hesitation, and then the continuation, you sometimes see that. So I think I saw that, and I got scared, and of course I got scared. It's coming up through VWAP, it's squeezing up, but it fails. And you just got to have your stop in the right place is the moral of the story. Above 63.30, you stay in this trade, and you reap the full benefits. I want to say, well, how could I have known? Well, I mean, I could have known, because if you're looking at this, where do you think you should set your stop? It should be above this candle. It's the recent high, right? If it comes up through there, it looks like it's making a higher high. And that's a break of pattern. That's actually a break of pattern, and that's when you should stop out, is when your pattern fails, not when you feel like, oh, I don't want to take that much, I don't want to lose that much money. You should have thought of that before. That's what you think about. The first thing that you set when you get in a trade is your stop, right? Well, your entry and then your stop. Then you decide, okay, based on how far my entry is from my stop, how much am I willing to lose on this trade, and how good is this setup, and how much do I believe that this stock can go down? A lot of people say, well, I risk $300 per trade. That's not really how I look at things. I don't risk any amount per trade because I don't think all trades are built the same. They certainly aren't. This setup, it's worth it to risk, for me, $400 and if I had risked $400 with my stop in the right spot, I mean, let's do the math. My entry was 62.40. My stop would be 63.60. Screw it. Let's say it's $1 risk. That means I get to take 400 shares instead of 300 shares. I lose $1 per share. I lose $400. Not the end of the world. Trust me. I've had bigger losing days than that. I've had bigger losing trades than that. Much, much bigger. $400 per trade is about, seems fine on a trade that I have the conviction to take and I believe is, going to work, and I have a strong conviction. That's it's a lot of, it's not a small amount of risk, but it's, I mean, again, 400 shares, $500 a share, it's a $2,000 trade. Again, that's saying that you don't take profit along the way and you get out all your shares at the perfect low, which is not realistic. But let's say you sell out half on this dip here maybe, and then say, well, I'll give the rest of it, unfortunately your stop would have to be like right here on the break of this low here to the upside, 61.70. But I mean, you don't get stopped out. You can take profit down here. It doesn't go up there. It doesn't go up to that spot. So it comes down here. I mean, this is over a $1,500 trade on 400 shares easily. All right, let's move on. I've talked a lot about that trade. But I think it's helpful, and that's the difference right there between a loss of $180 and a gain of $1,500 on 300 shares potentially. Oh well. All right, Nikola, I'm not even going to talk about that. That was stupid. PLTK, we had a IPO. I traded this once. I took one trade on this for the break. Let me go onto a 1-minute chart, because with IPOs I wasn't even looking at a 3-minute. I traded this for the break of 34.50, and I actually bought in anticipation of the break. I was looking at the level 2 and I saw the numbers. I saw the sellers kind of going away, so I bought. It kind of chopped around for a bit, and then it did kind of break through there, and I was taking profit on this candle, but this candle was choppy. The IPOs are choppy. This candle was choppy. I didn't give this one the room that it needed. Came back down, touched VWAP, continued higher up to $36. Here's a huge red candle and then right back up. So these IPOs are crazy. But I'm perfectly fine just being like, okay, I took the trade on it. I tried, but it didn't explode in one candle to like $36. You know, I mean, it did go up, but like, you know, this is kind of a grind higher, and you know, this is a good mover, but you never really know when they open up what their range is going to be. Are they going to be like, when it breaks that high, is it going to propel itself like $5 a share, like off the bat, like AFRM did that, kind of. Oh wait, no, this is not the IPO day. Where's the IPO day? Whatever, screw it. Just take my word for it. Sometimes they rip off the bat. Anyway, I got out of this one. I should have given it more room. That's it. CCIV. Oh man, this one was a roller coaster today. I only traded this one once. But it wasn't anywhere in here. When I saw this halt going down, and I was like, oh my god. It just dropped from $20 to below $18 in like a few seconds. It's halting going down. I'm gonna watch this one for a resumption, because if we get I'm looking for a dip opportunity on this, because this is moving a lot and I'm looking for a dip opportunity because I always like to look for dips. So anyway, it resumes and I don't buy. I think I could have right off the bat. It opened above the halt level price on a halt going down, which is very bullish. So you definitely could have traded this. I just get scared because when these open up, you have very little time. And on thinkorswim, the fills and executions are so slow compared to people trading on like Lightspeed and, you know, other brokers, using other brokers, that if you hit buy market when it opens up here, you could get slippage all the way up to like, I don't know, anywhere in here. So I don't really want to be using a market order. I could have used a hotkey to buy the ask price, but again, that's risky because even after it opens up, things just move so quickly. Your best bet would have been to maybe buy the ask on it, but that's risky. I'd rather be buying a dip than kind of a surge back up, but just because I like to get in at the best possible price. You know me. No, I'm just kidding. Anyway, so it actually fades back down, and I see this coming down here. As I'm watching this, I'm like, oh my god, there might be another dip opportunity on this, because this is getting crazy, and I didn't even know what the news on this was or anything. I was going in blind. Clearly there's some bad news on this, but to me it doesn't really matter, because unless Churchill Capital's going out of business, every sharp move lower like this is going to catch its bounce. So anyway, I'm in for 300 shares at 17.12. 300 shares. It actually, this is really a crazy trade. It comes down all the way to 16.60. 50-cent hit on 300 shares. I'm down like $150 on the trade. It's halting going down, and I'm like, oh no, I could be in big trouble here, because I'm in for 300 shares and a halt going down, and I'm holding in going into this halt. I look down at my phone. I'm like, all right, I'm gonna be in this trade and a halt going down. You know, it is what it is. Maybe we'll catch. I still feel like we can catch a pop back up. Boom, false halt. It opens back up, surges. False halts, you know, going down. False halt is good for the opposite direction. So if it's a false halt going down, that's a good sign for the bulls. It comes up through my price here, and once I saw my trade flip green, my mistake was to just pull the position. And I think that was because I was so expecting to be in a halt going down and like be down. I was ready to be down like 200, 250, $300 on this trade, which is a little unrealistic. But anyway, having been down $150, I look down at my phone, take a breather, look back up, boom, it's a false halt. It's coming straight back up. I'm like, oh my God, okay, I'm in the green here. And I just pulled it. I was like, $50, I'm happy with that. And I still am. But am I? All right, let's look at the potential here. I get out. What was my out? 17.30. Oh, God. So I got 18 cents on 300 shares, right? Look at this. Boom. All the way up nonstop back to $19. My entry was near $17. That's a $600 potential. I would have been taking profit along the way, no doubt. I probably would have captured $300, $400 instead of $600, but still, $600 of potential, and instead I took the 50. So it's like time and time and time again in a single day, and then not just in a single day, but this entire week and this entire month. It's been trades that didn't work out because I didn't. Part of the reason is the stops and setting the stops properly, and that's kind of what I talked about with plug earlier in the video. Setting your stops properly, it's so important. The difference between a base hit and a home run lies in where your stop is. It really does. And most of the time, it's always better to just set it. Not most of the time. It's always better to set your stop where it belongs, right? Not where you're gonna get a little bit less risk. Maybe I can set my stop here because then I lose 50. I don't lose 50 extra bucks when it. Because if it comes down here, it'll surely come down to the other where my stop should actually be. No. Don't do that. Set your stop where it should actually be, because the stocks will try to trick you. They'll try to make you. That's what I've learned over the last 2 weeks. They will try to freaking trick you. Okay, so the other thing is, look at this parabolic move down. Parabolic moves in either direction are met most likely. The quicker they happen, the more likely they are to be met with a same kind of surge back in the opposite direction. When you get that parabolic move down, always look for that bounce back to the upside. I see this all the time. Now, you can get real sell-offs that, I'm not saying buy at the bottom of any red candle. That's not what I'm saying. But this is a panic sell, boom. And especially when you see that false halt going down, that's super bullish. And I should have had the patience to at least hold another minute. Because if I just held another minute, we shoot back up to 1820. That's already $300 rather than 50. I didn't, obviously. I got out at 1730 right here, the second that I saw my position flip green, because I thought this one is moving fast right now. And I don't know the news on it. And it could shoot back down. I don't know what the news on this is, but I probably should have, at least sold maybe 100 shares here at 1730 and then give it a little bit more room. Oh well, this candle doesn't even have a wick to the downside, so it's like if I had just waited, it would have been all upside from here. But anyway, let's talk about my kind of final trade, which is DM. So if you have been watching my recaps over the last few days, you know that I have a pretty sizable swing position in Desktop Metal right now. And why do I have this position? Well, I got in here on this day because I like the setup and I like the company too. They do really cutting edge 3D printing, kind of revolutionizing supply chain, and they're doing good stuff. So I like this company. I like the setup. I like the double bottom here, and I like the hesitation. You can see on this day it comes up and comes straight back down, makes another low, comes up. Now it's consolidating at this same level, and then you see we get that continuation. So I'm up on this swing position nicely. I was up more. I saw this thing surge to 25.22 this morning. I posted about this in the Discord last night. I said if we catch if you guys see a dip to 22.50, you could enter this position, or you could enter however much of a position you want on Desktop Metal. And I thought that it looked good today for continuation. It did have continuation, and we did kind of see a dip into 22.70 here in pre-market. We hit that 22.50. And then a pop up to 25.24 on an acquisition news. I did not trade this in here, but it comes all the way back down, pops back up, and consolidates for most of the day. I left the morning down about $150 or $100 on the day. I was down 200, then I kind of brought myself back to down 100, and then I left, came back, saw Desktop Metal drop, and then come straight back up. But bottom here, consolidation at this price. When I saw this come down here and immediately get bought back up, I'm like, okay, that's bullish. It came down and then back up. That's bullish to me. So what did I do? I went long for 1,000 shares at a price of 23.28. Look at this choppy action here. It dips. I'm down like $150 on this dip. It comes down to 23.11. That's 17 cents on 1,000 shares. It's $170. I'm down. Surges back up. I'm in the green like $100 here. over 100 bucks, 110 bucks right here, because my average is 23.28. I'm 11 cents in the money here. Boom, back down, way back down to 23 bucks at the low here. Now I'm down 28 cents on 1,000 shares. That's 280 bucks. That just put me down 380 bucks on the day. I held the position. I was ready to cut it on a break below $23 level. But no, we come back up and it's all upside from there, and I'm taking profits along the way, and I actually get out of the trade with $200 of profit instead of a $280 loss. Whew. Big stuff. And I also like this because I have that swing position on in my Schwab account, and it's looking good. I like that this candle finished green. I'm okay that it has this kind of top wick because it has this bottom wick to kind of balance out the candle. So while we weren't able to hold these levels up here, we still have a lot of bottoms here and a lot of consolidation at this level. And when we finish the day kind of coming up here, I like that because it sets up a gap up on Tuesday. I can see in aftermarket we kind of are churning here, but I still like Desktop Metal here. I'm not saying it's not going to pull back and it's green days forever and beyond. I'm just saying I'm still in the swing position. We've got good volume on both these days, and I think there's still potential for this one to run on Tuesday. And we'll see about that. Overall, a pretty sideways day for Desktop Metal, despite big spikes in either direction. But anyway, so there you have it. 205 bucks on that. And I tried. I told myself I was going to try to make this a short recap, but I didn't. It wasn't a short recap. 26 minutes. I hope that this 26 minutes has been fulfilling for you and you learned something. And yeah, that's all I can hope for, really. Running on 27 minutes now. But anyway, up 100 bucks on the day. Quite a long recap for only being up 100 bucks. But I think there's definitely some good lessons in this one. Plug was there's some good takeaways there. I'm definitely frustrated that I didn't hold that position. Ugh, devastated. That's all there is to it. And one thing I will throw in there too on Plug is I saw this come down here too, and I was watching on a 3-minute chart, and I literally just missed this dip to this perfect retracement to the 61.8 Fibonacci level. I saw this come down. I didn't see it come down. By the time I clicked on Plug, it was already coming back up, and I thought, well, I'd be getting in kind of not at the ideal price, and if I don't get the ideal price, I don't like to chase moves. In this case, it would have worked, but I didn't chase it in the end. So anyway, that's just something I'd like to note, is when you zoom out, you see how perfectly it touched this and respected this fib level. It's been doing that, and so that's when I see that, I'm like, okay, fib levels are going to be important on this, so I'm setting my fib levels on it, and I'm keeping them there, and I'll continue to look at those in the future. All right, so that's it for me, and hope you guys are staying green. Let me know in the comments, how you guys are getting on with trading, and please leave a like on this video if it was helpful for you, and subscribe if you like this content, because I do it every single day. And that's it for me. All right, see ya. Discord link in the description.